Glad to have you join us now. Let's get into our second conversation. The Central Bank of Nigeria has recently introduced new guidelines to address the risk associated with foreign exchange speculation by commercial banks. The CBN expressed concerns that some banks hold long-term foreign exchange positions to profit from the volatile movements of exchange rates, which can pose risk to the stability of the Nigerian economy. The CBN issued these requirements to banks including a limit on the net open position, asking the commercial banks to sell their positions. Well, to make sense of these developments, I'm joined by the Director of Research and Strategy at Chapel Hill, Denham, Mr. Tajuddin Ibrahim. He joins me virtually now. Thank you, Mr. Ibrahim, for joining us. Let's get into the conversation now. You know, the CBN is known for its interventions and guidelines to addressing the country's FX crisis. The recent being a limit on the bank's open net position in the market, asking them to sell excess dollars. First, what is the net open position limit set by the APS Bank, and what does this mean for commercial banks?
Okay, thank you very much for having me on the show. The way to understand the net open position of banks is to start by understanding what the assets of banks really are. So the assets of banks that are held in foreign currency, is classified as, the asset in this case. And there are some liabilities that are also, in foreign currency. So that is the liability side of the matter in this situation. So in that case, when we have the asset minus the liabilities in foreign currency, what we have is what is regarded or classified as net open position. And these assets are, largely speaking, cash that are held in foreign currency, cash balances, and also loans and advances to customers that are held in foreign currency, loans and advances, to banks that are also held in foreign currency. In addition to that, we have investments in securities that are also held in foreign currency. So those are the asset side. On the liability side, we have customer deposits that are also in foreign currency, deposits to other banks that are also in foreign currency, and then as well as other liabilities. So when we take the total of the foreign currency assets and we remove the foreign currency liabilities, the balance is what is regarded to as net open position in the banking space.
And that is what the CBN is asking the commercial bank to sell. They call it excess dollars. And then, of course, let's look at the potential implications of these new rules on liquidity and stability. What is likely to change? Will liquidity improve in the market? Because some analysts have said the continuous depreciation of the naira amid a CBN intervention is beyond speculative activity. So in your opinion, what fundamental issues do you think CBN needs to address to stabilize the rate?
Well, I think the fundamental issue that the CBN has to address is, largely speaking, for the CBN to supply to the market. But of course, before supply, some housekeeping, which is what I believe the CBN is doing by coming up with, rules and regulations around, net open position. Previously, I described what net open position is. And what the CBN has come out to say is that as a bank, you should have 0% net open position, which means that, your excess foreign currency assets over the, foreign currency liability should be zero, which means that you do not accumulate on foreign currency assets. Whatever you have as a bank, you should sell. What does selling by the banks, what does it mean to the financial market? What it means is that the banks will be supplying to the foreign currency market, and Nigerians and individuals, companies, corporate organizations that have genuine needs for foreign currency will be able to buy from the banks in this case. What, largely speaking, the market is lacking is liquidity. And if the banks, with the help of these regulations, sell to the market, there will be little or no volatility in the foreign currency market. So what the CBN is doing is consistent with ensuring that there is an improvement in liquidity in the foreign currency market. If we now come back to the second side of what can the CBN do, which is for them to supply foreign currency to the market, I reckon that it will be challenging for the CBN to supply foreign currency to the market if we do not see an improvement in US dollar inflows into the Nigerian economy. Those inflows can come in via our export earnings. They can come in via our borrowings. They can also come in via investment inflows, either in form of foreign direct investment or foreign portfolio investment. If we're looking at foreign portfolio investment, for instance, the expectation is that the CBN will hike interest rates, make interest rates elevated to the level that foreign portfolio investors will find it appealing, and then bring in US dollars to invest in relevant instruments. Relevant instrument in this case is number one, OMO, which we call open market operation bills. The relevant instrument in this case is number two, treasury bills. Number three, equities on the Nigerian Stock Exchange. So we need elevated interest rates in that regard by the CBN.
Okay. So let's look at the role of the banks in this FX market. I mean, they have also come under the fire of the CBN. They've been accused of holding the dollars to profit from them, like you just said earlier. But is it possible to absolve the commercial banks of any responsibility in this crisis?
I think they have enormous responsibilities to play in the entire thing. We bear in mind that commercial banks are into business to facilitate financial transactions in the economy. So if we are looking at the foreign currency market, largely speaking, the players are the commercial banks. Then we have the exporters that also have important roles to play. So the commercial banks in this case are expected to ensure stability by supplying and selling to the market. And I think what happened last week Friday is a strong indication that normalcy in terms of improvement in liquidity is gradually coming to the market. On Friday, like a day or two after that CBN circular, we noticed that the volume of foreign currency traded in the foreign currency market rose significantly by well over 80% to around $440 million. The last time we saw that was a very long time. Before that, we were seeing only 100 to 150, 160 million dollars traded in a day. But on the back of that circular, I believe the banks sold and liquidity improved in the market. My view is we need to watch out for how that liquidity improvement is sustained in the coming days. Then we should be talking about more stability in the foreign currency exchange rates.
I was going to ask you, what is the current exchange rate for today? I don't know if you have that information. I was going to ask you that.
So today the market, really hasn't closed. And, what we could gauge is what is regarded as intraday. Intraday, we comfortably can say that the market is still around, 1,400 plus, around 1,500, and in some cases above 1,500 at the official market. And the same thing seems to apply to what we have on the streets, because what what the official market has done is to migrate to the similar rates available in the parallel market. So the margin between the two is now not that enormous versus like a month or two ago.
A few things before I let you go, Mr. Ibrahim. Let's look at the ban on the Bureau de Change operators before the CBN started using the commercial banks as the gateway for dollar sales. I mean, as point of sales for the dollars. But let's review that policy. Do you think it's time to start a conversation around the policy of FOREX ban to Bureau de Change? And then, of course, but because it will seem like the FX rate, since the liberalization has not really improved.
Well, I think the major thing that has not really made the development turn positive in the foreign currency market is largely speaking because the CBN is not selling. The CBN has not intervened in the market now for well over 5 to 6 months. They only created a market where there are willing buyers and willing sellers, and in that case, the BTC operators are also not included. BTC operators that have the liquidity are allowed to sell in the market. They are also allowed to openly quote rates to ensure transparency, to ensure an increase and improvement in liquidity flow in the foreign currency market. So I would say that what is possibly left to happen is for the CBN to supply. And in terms of the backlog in the financial system, the CBN disclosed, the governor disclosed earlier today that out of the $7 billion backlog, they have cleared $2.3 billion. They classified $2.4 billion as invalid for settlement. And the only thing they have to settle now is just about $2.2 billion in terms of the backlog in the financial system. Once that is cleared, my view is that they will be emboldened to come to the NAFEM market to intervene on as the need arises. And that should also help to stabilize the foreign currency rate in the market, in my view.
Let's look at expectations and outlook for the CBN MPC meeting this February, just 3 weeks away. What are your expectations and what is likely to lead conversations using your, I may say, crystal ball now to look at what is going to happen in that meeting?
Well, I think what we should expect is sustained hawkishness of the monetary policy stance. If we look at it this way, inflation has been rising on a steady note, and we bear in mind also that Nigeria missed a September meeting last year, a November meeting last year. The meeting for this year, January, was postponed to February. What that looks to me is that in a normal environment, when you have inflation rising, you would expect the central bank to have implemented at least 100 basis points increase in interest rate at each of the 3 meetings that I talked about now. And that looks to me like 300 basis points. Most likely what we are going to see when they see it by 26th, 27th of this month is they will increase interest rates by about 200 basis points, which I consider aggressive. A more aggressive stance would be for them to increase interest rates by 300 basis points. I think either of the two will materialize, and I expect the results to be encouraging for foreign investors that will bring in US dollars into the economy to stabilize or help us to stabilize our currency. With that in mind, it is likely that it positively reflects on inflation, as inflation at that point should begin to moderate on the demand side. are my views.
Just before shutting down on this conversation, quickly, if you can do this in just 1 minute, I need you to speak to speculations that the CBN was going to convert the domiciliary account estimated at $30 billion to Naira, although the CBN has refuted that report as fake. So talk to us about that before I let you go quickly.
So let's just, go in line with what the CBN said. The governor was on a TV show earlier today saying that, that there is no iota of truth in that speculation. So the CBN is not converting any $30 billion domiciliary accounts or balances into Naira. Nigerians that have foreign currency in their domiciliary accounts will continue to enjoy the status of those domiciliary accounts in terms of the balances. There is no plan to convert them to local currency.
Right. Okay. I think we need to leave it there. Thank you so much, Mr. Tajuddin Ibrahim, Director of Research and Strategy at Chapel Hill Devhan. Thank you for coming on Business Nigeria.
It's my pleasure.